Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down into bite-sized pieces. Today, we're going to do a live refresh of the market, see exactly where cryptocurrency and digital assets are going, plus do a live refresh on the traditional markets, most notably the S&P 500 and gold. Also, U.S. banks are paying the Fed as Bitcoin adds 16%. So essentially what's happening is the U.S. banks are paying the Fed to take their money. And this article goes deep, so we're going to spend a little bit of time on it also. Ethereum daily active addresses jump up to a 9-month highs after Black Thursday. So as everything is crumbling around us as far as the traditional markets go, cryptocurrency marches right on. And finally, we're going to go over scam of the day because we weren't able to do it last night because my second video did not get made because I had too much going on, so I apologize. But let's jump into today's stories. So first up, the market. This is from yesterday. I always leave these tabs open, as I think some of you also do in your browsers. So I'm going to do a live refresh. So let's see where we are. So just to make sure here, this was yesterday's news. So Bitcoin's at 6,300, Ethereum was 131, XRP was 15 cents, Tether 99, Bitcoin Cash, so on and so forth. So let's take a look at what we got today. And right now it is 6:45 a.m. That is Texas time, and it is March 24th, Tuesday. So let's do a refresh. Nice. So right now, big jump. So Bitcoin is now at 6,700, so we're looking at $400 worth or a 12% gain. Ethereum is up to 140, XRP a whole penny, wow, 16 cents. Tether, Tether's Tether. Bitcoin Cash, Bitcoin Social. And remember, Bitcoin Cash and SV, they have a halving right around the corner, so this is going to get interesting. And I think we are up. Market cap is 186 billion. So look, traditional markets, let's see what they're doing. So here's the S&P 500. This is from yesterday. Looks like when I left off around 1:10 p.m. it was at 2264. So let's see if it went up 12% as well. I don't think so. Refresh. And we can see it took a dive. It closed out at 2236. So we can see traditional markets, and this is just one indicator. S&P 500, just the top 500 or the high-performing 500 large companies listed on the stock exchange in the U.S. They are not doing what other investors think they should do. I believe it went up yesterday after the news that the Fed was going to do unlimited quantitative easing or unlimited printing, which makes no sense to me. But I mean, I'm not an investor in the traditional stock market, just not. So I think some investors are like, great, we're going to get a bunch of liquidity, a bunch of money into there. And then people are like, wait, what the heck? Maybe that's not a good idea. And it dropped down. Now, that's just my limited way of thinking. Obviously, there's other things, other factors behind it. But we can see the traditional stock market is not doing so hot. Let's take a look at gold. I have no idea. So you choose from yesterday. It was up 1%. Silver was up 5%. I expected it to go up, but I could be wrong. Let's do a little refresh. Not so much. So about the same. But look, if anything's up, it's gold, silver, and cryptocurrency digital assets. Traditional market is not doing so hot. So who puts a lot of their money into the stock market? Well, normal average, everyday average Joes, but also you're looking at a lot of the baby boomers who invest into their 401k. And when they keep looking at this and these prices are going down to down to down, they're like, where do I go? Well, I think there's only one place you can go, and that's in our market, cryptocurrency. So let's go into today's stories. So first up, this is a great article. Dalmas G-Tech. I got to reach out to this guy on Twitter and just give him a attaboy because he always writes good articles. He's always got the good stuff going on. So U.S. banks are paying the Fed as Bitcoin adds 16%. So the U.S. Federal Reserve announced a raft of new initiatives to prop the enfeebled and a dysfunctional Treasuries, mortgage, and corporate credit markets on Monday. First of all, what a great sentence. Enfeebled. Dysfunctional. Those are two words that accurately can describe what is going on with traditional markets and treasuries, mortgage, and the Fed. It is amazing to me that we can just print to infinity. Now, I've had some comments where some people say, you don't know what you're talking about. It's okay to print unlimited amount of money. It doesn't really matter. And I guess we'll see. So maybe I'm wrong here. Anyhow, moving on. As observed by Larry Cermak, a crypto influencer, the 1 month, 2 month, and 3 month US Treasuries are all in the negative territory. And he states the Treasuries all now have a negative yield. So put that in perspective, or make it easy, banks are paying the Fed to take their money. Imagine, the banks are paying the Fed to take their money. Larry explains that banks now have more money and there is nowhere to store them except in negative yielding treasuries. Why? Because if you have a lot of money, you have nowhere to store it. Bank accounts are generally only insured for up to $250K. You can't store it in equity or most of other assets because all their values are tanking. And we just saw that in the previous slide. It shows no faith in the current market. Basically, people are so terrified to hold securities in the short term, they'd rather lose a little bit of money rather than having to risk anything else right now. So my question is this, and it goes on. It's a great article. Good job to this gentleman. But investors are still cautious as Bitcoin adds 11%. Why? Why are they so cautious? What is going on? Because look, if you can take a look at the actual how Bitcoin has done over the last year, we'll just say, or 2019, this is how Bitcoin performed against everything else. Everything else. So 53%. This was Bitcoin has outperformed most traditional asset classes since the start of 2019. This is from Binance Research. I mean, they're a little bit biased, but the numbers don't lie. Bitcoin, 53%. Crude oil, 33%. We know exactly where that is up right now. Tech stocks, U.S. real estate, U.S. stocks, global state, international, U.S. bonds, 2%. Gold and agriculture. So when we look at these types of numbers, it makes clear sense to me where people should be putting their money right now, especially. I mean, I know where I'm putting my money. It's not as sure as heck isn't the traditional stock market. But people don't know these numbers. I will say this. I was on Facebook because I'm on quarantine. Nothing else to do but look at Facebook. And there was a post by one of my brother's neighbors, and she's an older lady. And she was talking about, what was she saying? About the traditional markets, how it was tanking and her 401k was down. And I just left a comment. I said, Bitcoin. And then she messaged me. She goes, I've heard of that. What is that all about? And I said, well, it's up. I think yesterday it was up like 6%. And then she sent me a message back. She goes, but wasn't it at 13,000 just a couple of months ago? Question mark, question mark, question mark. And then I sent her back. I said, actually, it was at 12,500 in June or July of 2019. Highly volatile. And we went back and forth in the exchange. But basically, I told her it's very volatile right now, but in the future, it's going to be huge, and it's a great hedge against the traditional market, especially for your 401k, which is dipping and will only go down farther. So when people start to hear about Bitcoin, here's what they think about. I mean, I think generally, and tell me what your thoughts are on this. But when they hear about it, the one they actually remember is, wasn't it 20,000 at one point, and now it's at 6? So why would I invest in that? That's stupid. But if they look at the numbers and really take a look and know what we know, I think people would really be turning the corner into what they should be investing into. So I'm going to challenge everybody out there. You need to help people help themselves. So when people are talking about how they're losing their asses right now in the stock market, which they are, or how they're not doing so hot, I need you to engage them in the conversation and be like, look, Bitcoin and the cryptocurrency market, whatever you believe in, Ethereum is a great bet, XRP is a great bet. If you want to look at Bitcoin Cash or Cosmos or Chainlink or Tomato Coin, I don't care, whatever you're into. I do not care what you're into. Again, I'm not a maximalist. I'm a crypto maximalist. Whatever goes up is fantastic. If I see something like Quark Chain or what, I don't know, goes up, I'm like, great, that's a crypto asset. I'm down with that. So whatever you talk about, just make sure it's a decent, or you believe in it. Let's just say that. I don't care what you believe in. But if you can tell them this, look, and you can use the example. Look, Bitcoin, if you want to take a look at it, it has outperformed most traditional assets, or all traditional assets, since the start of 2019. And yes, it was at 20,000, but it's going to go up higher and it's going to be big. I need you guys to be out there and talk about this and not shy away from the conversation. Even if someone says, oh, it wasn't at 20,000, that's stupid, da da da. Explain to them why it is. And this is the time we should be having the conversation, because if we don't, people are going to lose their money more and more and more in the stock market. It's not going to turn the corner anytime soon. So that is my challenge to everybody, and hopefully you take me up on it. But not only that, I want to talk to you about where things are going as far as what people will be hearing very soon, and not only from you, hopefully from other type of big investment companies. So this is VanEck. This is January 2020, and I've been talking about this enough. Look, we've got Fidelity Digital Assets, we've got TD Ameritrade, and now here's VanEck. And as far as assets under management, Fidelity has over $1 trillion. TD Ameritrade is close to that. And VanEck is, they're a big buyer and believer in gold. They have $49 billion on assets under management, and they just put out this just a couple months ago, which talks about the investment case for Bitcoin. So as we see the crypto market move up and the traditional markets move down, that will only enforce the narrative that this is a great hedge against traditional markets. So we need to get on top of this and hit people from both ends. People that they know, which are their close relatives and family, i.e. you, plus the institutional investors who say, look, this is a great opportunity. So real quick, I'm going to go over 3 pages. 7, 12, and 13. So I'm gonna try to link to this PDF, but really what they're doing is they're saying, look, this is Bitcoin versus gold versus the dollar, and they just pretty much tell you how way better Bitcoin is than gold. And they lay it out pretty simply. And then moving forward, page 12, and it goes over a lot of things, the halvings. Different aspects, different numbers. It's pretty good. And then 5-year return, 3-year return, 1-year return. Excellent. And then they just pretty much say this, which is true. There is a potential for an increased portfolio diversification. They look at S&P, bonds, Bitcoin, gold, oil, emerging market currencies. And it says right here, a small allocation to Bitcoin significantly enhanced the cumulative return of a 60% equity and 40% bonds, which is super safe and in the past portfolio allocation mix, while only minimally impacting its volatility. Now, if you don't think that they're not going to push this narrative even more and probably increase the allocation that they want people to actually do, you're crazy. I think before this pandemic happened, this black swan event, they would probably be like, hey, Jim, let's just put like 1 to 2% in. What do you think? Because this is what we got, this is what we see, and it's a good hedge. Sure, I believe that as we emerge out of this market, they're going to start to say bigger numbers. Hey, Jim, how about 5% to 7 to maybe even 10 to 15%? We should allocate into cryptocurrency digital assets. Look, what we've seen before is that during this whole pandemic, the whole cryptocurrency market went up as the traditional market went down. And if we take a look at historical data, in 2019, it outperformed every other class. We don't see a reason why this wouldn't work going forward as the whole world becomes a more digitalized place. What do you say? That sounds good. Let's do that. Actually, I even talked to my friend, and they were telling me the exact same thing from Bitcoin and all the other cryptocurrencies. So if I have friends and family telling me, and I have financial investors telling me the same thing, how many times do you think people won't get it through their head that they need to invest in cryptocurrencies? Just saying. Let's move on. Oh, let's not move on. Real quick, I want to talk about this. You know that I'm not a trader. I don't trade. I just don't have the stomach for it, and maybe not even the intelligence for it, as some of you have pointed out in the comment section. It's just good. It's funny stuff. But I do dollar cost averaging, and I do very conservative person. I just don't, spend a lot of money. But I put $25 into Bitcoin, Ethereum. Well, actually, let me just tell you, here's what I invest into. These are my holdings. Bitcoin, Ethereum, Xrp, Chainlink, Cardano, and Eos. Looking at Bitcoin Cash as well. But right now, here's my big 6. and my only 6. I used to have 50 different coins back in 2017, 2018, but I just condensed because I had too many things going on. So what I do right now is I put $25 into Bitcoin every week. $25 into Ethereum. I've held off on XRP putting money into because I'm just waiting to see what happens. I believe in the project at some point, but I don't know if it's going to be a year, 2 years, or 10 years on the road. I mean, it could be a monster, but I think that over the shorter term, Bitcoin and Ethereum are a bigger play, easier play, and much more conservative for people like me. Cardano, I've been putting money into my eToro account. And Chainlink, I also put $25 into because smart contracts and oracles and all those things. And EOS, I don't put I don't put any more money into EOS right now because I'm on a wait and see type of pattern. So for all these, I'm going to double what I put in. So now I'm going to put $50 into Bitcoin, 50 into Ethereum, 50 into Chainlink, and in Cardano, I don't know what I'm going to do with that right now, but I may actually just keep going with that. But those 3, definitely. So I see it like this. Traditional markets have been going down. Cryptocurrencies have been going up. So now's the time. It's like a definite pattern for me. I may start this on the next downturn, but it's going to happen because I truly believe in where it's going. I thought, honestly, that we would see more of a downturn, especially with the coronavirus cases start to increase and deaths increase in the United States. I know it's just truth, it's just the numbers. But we have seen it do the exact opposite, which is surprising to me, but I am pleasantly surprised, which means it is more resilient. Okay, moving on to the next story. So next up, Ethereum daily active addresses jump up to a 9-month high after Black Thursday, and I always like, and again, Dalmas, great article, I always like articles that just show where we're going. I don't talk a lot about TA because I just don't understand. I'm more like a fundamental type of person. Like, where can we find the good news? Where can we see where the actual industry is going? So, number of Ethereum daily active addresses, or DAA, is at a 9-month high, bringing to light the resilience of the network and its users who continue to shuffle tokens even as the world's economy hangs by a thread. So, you have to understand that these types of shuffling or active addresses, these could just be, just moving from one account to the next. Maybe somebody's opening up another address. Maybe they're just shuffling back and forth. Maybe it's a bot. We don't know, but it's not like they're doing a bunch of payments. However, as we get into the article, you'll see why it still is important. So it states here, each address is unique, and the more there is shuffling, the more there is activity. A net positive concerning ETH's demand is directly proportional to how active its dApps are. Transaction fees are paid in ETH, regardless of the ERC20 token value. Before the steep loss of March 12th, the number of active addresses stood at 250,000 per day, but rose to almost 400,000 by March 21st. And again, I don't know what it is right now, March 24th, I assume it's even bigger. So ETH, the native token of the ETH network, or Ethereum network, lost 17 billion when prices dropped from 277 to lows of 112. Lows of 112. I believe the all-time high was around 1,300, 1,400 for Ethereum. So at $112, what a bargain. Let me say that again. That is a huge bargain. I can't believe how low it is. There were concerns that investors were losing confidence. However, from price charts, ETH has found support and the recovery has been swift. So it goes on to some more stuff, but here's the thing. You have to understand with Ethereum, everything, or most everything, is being built on ETH, from games, which are going to be huge, to DeFi, to all sorts of dApps or decentralized applications. I see ETH going to 10K. I see ETH going to 10K. So price below $200 are just a huge bargain right now that you can really pick up and run with it. I don't see ETH being 10K like in 10 years. I see ETH being 10K in a year to 2. So however many Ethereum you can pick up, if you don't believe in Bitcoin and you think it's old technology or whatever else, sure, whatever else. But if I always see, like, people who don't believe in Ethereum too much are, then or Bitcoin too much, then you see them like the XRP maximalists, and they think it's going to go to, you know, $100 per coin, $1,000 per coin. But there's always the middle ground, and I think that if you're a Bitcoin maximalist or you're an XRP maximalist, I think the majority could be right said in the middle as far as Ethereum, right? I think I see Ethereum as just that player that everybody can kind of rally behind because they're like, yeah, it's being used a lot. dApps are being created, things are being done. We see it with the decentralized finance, and everything's built with ERC20 tokens still. So if you could just go into that account, why not do it? And to me personally, I know this is where all the money is made. This is where all the money is made. So now if you guys don't know, I have a couple other businesses, one of which is I teach nursing students how to pass their clinical exam through an online educational platform. I was a medic in the Army, became a nurse, got out. Well, I'm still in here and there. I might actually have to go back with this coronavirus outbreak and help out, but I do the educational platform. So I do that. I do selling on Amazon, and I got different products. Right now, a couple of my products are still being sold because they are essential. Other ones are not being allowed to be put in because Amazon is shifting their function to most of the essentials and medical grade stuff. And then on top of that, I also do this right here. And me and my wife also do a nonprofit charity for kids. But so when I do all these things and I look at business aspects of it, this is where all the money is made. And I will tell you something about education. You have to tell people, it's the same as marketing. You have to tell people 7 to 10 times the same message so they can get it through their head and understand it. It's true with marketing. That's why you see billboards so much, you see ads so much, because the average consumer needs to see something 7 to 10 times before they buy. Unless it's some awesome product like they need it right now. Like I don't need to sell you an antibiotic if you're sick, right? But for like cars and those type of things, I do. For education, I need to explain to students, around 7 times so they can get it into their head to really absorb it and know it and have it in their muscle memory. So I feel it's the same thing with what I'm going to show you again. You've seen this before. This will be my 3rd time showing it, but it's essential that you see this. And I think people should watch this every single day. And it's a 2-minute video, and it explains why this is the time when everybody gets rich. You have to understand this message, and it has to get through your mind. If you don't want to listen to this, I think you should, even if you've heard it before. But if you want to fast forward 2 minutes, go right ahead. But I think it's a mistake. Listen to this message.
It's the biggest opportunity in the history of the world.
Right now can actually be one of the greatest opportunities of your lifetime.
This crash is going to be so big, even if they solve the coronavirus crisis, it's still going to crash. Out of 100 people, only 2 will do it. 100 years ago, if there was a stock market crash in England, it didn't affect anybody. But now the US market goes down, the world goes down. I hope I'm wrong, but I think we're heading for a global depression. And now the good news is that for those who are prepared for it, you'll do better.
A recession or a bear market often only happens every decade. And so right now we're entering into that territory and we haven't hit bottom yet. Things are going to get worse.
Most Americans are clueless. They don't know what's going on.
You're going to have quite a few recessions and moments like this that will happen throughout your lifetime. And if you're smart and proactive, you can really take advantage of it in a great way. And for me right now, I'm looking to double or triple my net worth as things kind of rebound over the next year or so.
The last crash in 2008, I was on Wolf Blitzer's program 6 months before Lehman Brothers went down. And I said Lehman was going down. Nobody listened, but it went down. And so I've been expecting this market to go down for quite a while.
One thing that Warren Buffett is known for saying is that you want to be greedy when people are fearful, and you want to be fearful when people are greedy.
Most people remember 2008. They all remember it because the best time to start a business is right after a crash. I made more money after 2008 than ever in my whole entire life.
And right now, when there's a lot of fear, there's a lot of great opportunities. Sir John Templeton, one of the greatest investors of all time, said that you can make the most amount of wealth under maximum pessimism. When people are the most scared, when they're the most fearful. And if you had that approach and mentality back in 2008 when the market crashed, and you had money put aside, you're prepared for it, you could have, changed your life in so many ways and created a lot of wealth.
That's true. So right now, everybody's scared. No one knows where we're going to go with this coronavirus. I can see it as this. When you have everybody in the world working on their own individual projects, you have some scientists and epidemiologists or whoever else, they're working on a new antibiotic, or you have a group of people working on cancer, or you have other people working on longevity, or whatever it is. If you take the whole world, the entire world, and focus them and turn their attention towards one thing, the coronavirus, how long do you think they can possibly last? We've already got reports of different vaccines being tested, different modalities being tested, different things happening in the background. How long do you think this coronavirus can actually last? Especially as the global world comes about and says, look, we know what we're going to do, social isolation, so on and so forth. So I don't see this lasting. I see things going back to normalcy, not like tomorrow, but relatively soon. So in this time of uncertainty, the question is, what are you going to do to put yourself ahead? And I know what I'm going to do. I'm going to keep dollar cost averaging in. I'm going to crease a little bit here and there, but I'm not going to stop until I get to my point that I feel comfortable with. So that is it for today's video. Look, if you got time, stick with me for the scams today. They're still hanging around, and I know as more people come in, because you're going to talk to them, the financial analysts are going to talk to them, and they're going to come in and start to invest in here. They're going to get confused and going to get screwed out of their money. So if we can help them out, that would be fantastic. So first up, to the scam of the day, I created this because I saw too many scams going on. And as you all know, I'm still a nurse, and I used to work a lot with the elderly, and it would be like every season, or every so often, we would see people get screwed out of their entire life savings. And it was because of scammers like this, and I hate them. I hate them with a passion. So when I see this happening in the cryptocurrency market, so the boomers are going to come in at some point. How many of those boomers or people who 60, 70, 80 and above are going to get screwed out of their money? Believe me, they're all on Facebook. They're all on YouTube. They're all doing things social media wise. Not all, but a lot of them are. So when I see this, we need to police our area, because it's not like YouTube's going to help us, because they don't. So in my description of every one of my videos, there's going to be a section called Scam of the Day. And if you can click on the link there, it's going to take this handy dandy Google spreadsheet, and here are our remaining out of all these scams. So what we're going to do is we're going to take a look at one of them first. Let's see what we got. So this one here, it says here links in the description. Let's see. Official competition. So real quick, how do we know this is a scam? Well, we take a look at the comments. Unfortunately, comments are turned off. That's a red flag. Second of all, we look for what I call an asymmetrical giveaway. So in here it says, if you send us 1 Bitcoin, you'll be airdrop 5 Bitcoin. If you send us 5 Bitcoin, you'll airdrop 25 Bitcoin. No one does that. And if you don't believe me, this is from Binance. Send Binance an email to their official website, and they'll tell you no. And if you think Ripple's giving away free stuff, send them an email to their official website. They're going to tell you no. And every company or every place that says, we're going to give you free money, send an email to their official website. They'll all tell you no. So that is an asymmetrical giveaway. But let's see what this is. What is this? Official competition. Oh, this looks good. This looks great. And let's see. Here it is. Same crap we always see. If you send 0.2, 0.15, we're going to give you a ton back. That's BS. So let's just get rid of this now, or at least attempt to. So we're going to downvote it. And look, you're not doing anything. You're just in quarantine just like me. So take the time and let's report these. So click on these 3 dots and report. And it's spam or misleading. And it's a scam and a fraud. And I'm going to click next. And I'm going to say, hey, this is a scam. And that's it. Click report and you're done. So it takes 5 seconds. It's super simple. It's something that you can do to help this community, and I will be greatly appreciative. Now, you don't have to do that at all, but it would be I would be personally in your debt if you would help me out. So thanks. So that's it for today's video. So thanks for watching. If you like this type of videos, there's gonna be 2 more that's gonna pop up, and that's it. So yeah, thanks. See you on the next one.